Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, June 10th, 2019. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. This is kind of a long view of the ES right now, and the reason I'm out at this level is because I wanted to show this high here. Again, that's the 2018 high from January that set the key range for this large range that we were using for the last year and a half. We've come up here and failed. We've come down here and failed back up. Now we've come back up here and failed. Little retest and drop, and now we're right back at that level yet again. This is a very important spot in the market, 2880 to 2900. That's a very, very important zone. That's what we mentioned back here. If we can't hold that level, we likely drop. On the retest, if we couldn't get beyond it, we likely drop. And here we are again, right at that level. Are we about to see another round of weakness? Because if so, if price cannot get back above 2900 and find acceptance, there's a real possibility that we drop back to 2700, which is the midpoint of this larger range. And we have a shot to go all the way across the range to the lower part of the key range and perhaps even into new lows below the December lows. That is a very real possibility if price cannot get beyond 2900 and find acceptance at some point. If we kind of zoom in here, you can see again this has been a very sharp rally that we've seen here recently. A lot of headline risk that has led to moves both back down and back up. But now we got to see, does the market want to find acceptance again above that 2900 level on a swing basis? Because if not, again, we could be looking at some sort of pullback that could take us as low as 2700 or quite a bit lower. So this is going to be a very important zone to watch early this week. Any rejections or failure to get beyond 2900 could be significant. Above 2900 opens up a retest at recent highs. All right, let's take a look at the NQ. You'll see with the NQ, very similar type of price action, but less of an enthusiastic bounce than the ES here. We are back toward the recent highs here. You can see these are the highs that were taken out. A little bit of a box and a failure, lower high and a failure, and now we're bouncing back again. So again, this 7600 is going to be very important, up to about 7700. Even right now, 7500 is kind of the midpoint of the previous month's range, and we're right at that zone. So again, we got to see if the market's going to find acceptance beyond those levels, because if not, we could be looking at quite a bit more weakness here that takes us back toward 66, 6700, or perhaps even lower on the next move. Again, this has been a pretty solid bounce that we've seen over the last week. But we got to see if the market's going to find acceptance beyond these new levels. That level right there, which is 7,500, is the midpoint from the previous month's range. We failed below it. We're bouncing back to it. Can we find acceptance above 7,500? If not, that could lead to another round of weakness. So right now, very strong flow higher. Above 7,500 opens up a move back to 7,650 with a shot to go to new highs. All right, let's take a look at crude oil. Now, crude oil is very, very interesting right now because we have a compression signal that has developed. If you look at the last 5 sessions, I have it on a 6-session range right now, but let's drop it down to a 5-session range. You'll see that last week we formed a compression signal here on the ADR indicator here. So basically, over the last 5 sessions prior to this current range here, that was a very compressed signal compared to normal, and if we see expansion out of this range, we could see between 7 and 8 handles of range over the next 5 to 6 days. Now, one thing that's very important is we've been trending lower, and we're now testing prices into the PIMA trigger zone. We're also retesting prices at the 55 LVN from below. That is very, very bearish. That's very bearish. That suggests that we could see another round of weakness again. When we broke down below 55s, that was a level that we knew that had a lot of good support here from prior tests, and when it came into it and couldn't bounce, it suggested that we could be dropping quite a bit down. Now coming back to retest that level from below suggests that bears want to defend this area and see if they get another round of weakness. I've been very vocal about the fact that we would likely be trending toward 49s for that test at CVPOC. Ever since we rejected up here, it's been a downtrending move, and 49s could be hit. The one thing to keep an eye on is in the 60-minute chart we have kind of an inverted head and shoulder type of pattern where we have market structure that looks like this. And that right there, if price can hold above 52.5, if it can hold above 52.5 this week, that could be very, very bullish. So even if price were to drop into 52.5s, if there's a higher low that forms into that zone, that could open up a return back above 55s, perhaps as high as 57 and even into 60. So right there, that's going to be very important. 52.5 is going to be the level to watch on a weekly chart basis. There is a rejection from last week's range. Nice little tail that looks like that. 52.5, 52.50 and change is about the midpoint of that range. So any retest of that throughout the week and a hold could eventually lead to some sort of strength. So 52.5 very important, 55 very important. Right now, bears looking to defend the downtrending action here, and that could lead to some initial weakness. I would keep an eye on 54s here. A break below 54 could open up some intraday weakness. Holding 54s could advance this thing beyond 55. So those are the key levels to watch here early on this week. Looking at gold futures, this one's down about 1.25% right now. Quite a bit of weakness that we're seeing here. This is the first red day that we're seeing in a couple of weeks. Before that, we had coiled up significantly. The bullish outside day here led to a major breakout. We talked before that this day could lead to a break above 1305s that opens the door to 1350. We finally got 1350 on Friday. It was the first time, and I mentioned before that even though we had a nice tail there, we didn't hit it. It kind of feels weird when you don't hit that level and you get so close. So we finally got it on Friday, and here straight away on Monday we're seeing selling pressure. Actually Sunday night seeing selling pressure back down. Again, this market has been flowing to the upside. I talked about the fact before that between 1360 and 1375 it's been nothing but resistance over the last 5 years. At some point the expectation is that we will see expansion and perhaps a breakout. We have a large rounded bottom accumulation type of pattern that could forcefully lead to a major breakout. But until that's seen, you got to treat this area as a zone of rejection. And so anytime we get up into this zone, it suggests that we could see weakness back toward value. Value right now 1285s. So even with this pullback, we could still see a little bit more strength right now. But clearly in this upper zone here is a zone to watch for resistance. Given the strong move we've seen right now, it's going to be interesting to see if we find some sort of pullback strength here, because that could lead to at least one more attempt higher. But right now, clearly showing some weakness, and I would say if price cannot reestablish back above 1334s, we may have further downtrending price action today in gold. All right, that is it for now. We'll see how this develops heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.